Hi there everyone, Ruxarmain here from HBCS, and in today's video I'm going to present International Standard on Auditing 520, which is related to analytical procedures. So in this video we are going to cover what are analytical procedures, what is its purpose, its importance, its objectives, scope, key definitions, key requirements, practical examples, some common mistakes, exam focus points, and quick summary as well. So let's start with its purpose. Analytical procedures. ISA 520 requires auditors to apply analytical procedures to identify unusual trends, relationships, and risks during an audit. Now, what are analytical procedures? Analytical procedures involve comparison and analysis of financial data to detect possible material misstatements. Its objective is to identify inconsistencies or unusual relationships to assess whether financial information makes sense, to reduce audit risk and focus on high risky areas. Why it is important for auditors? It helps auditors understand the business, focus on high risky areas and improve audit efficiency. Let's have a look on some MCQs that are related to your exams. ISA 520 deals with audit sampling, option B, tests of controls, option C, analytical procedures, or option D, audit reporting. So the correct option is option C, analytical procedures. Let's move forward towards importance of the ISA. Why this ISA matters in audit practice? Analytical procedures allow auditors to identify risk areas early rather than testing every transaction. Its link with audit quality and compliance, supports risk-based auditing, strengthens audit conclusions, and ensures ISA compliance. What is its relevance in exam? Commonly tested when profit margins change unexpectedly, ratios differ from industry averages, and final audit review is performed. Let's see some exam focus MCQ. Why are analytical procedures important in an audit? They replace all substantive testing. They help identify high risk areas. They guarantee detection of fraud. They are used only at the end of audit. What will be the correct option? That is option B. They help identify high risk areas. Objective of the ISA: to obtain relevant and reliable audit evidence using analytical procedures. In simple terms, auditors compare financial information to identify results that do not make business sense. What is its scope? Situation where the ISA applies. Audit planning. Substantive analytical procedures. Overall review at the end of the audit. Now, what is audit planning? Audit planning means deciding in advance how the audit will be carried out, what areas to focus on, and how much work is needed. What is its objective? To ensure the audit is performed efficiently, identify high risky areas, allocate audit resources properly, and reduce audit risk. What the ISA covers: trend analysis, ratio analysis, and reasonable testing. What the ISA doesn't cover: detailed transaction testing and audit sampling techniques. What are audit sampling techniques? Audit sampling means checking a sample instead of all transactions to draw conclusions about the entire population. Let's see any MCQ which is related to this topic. The main objective of the ISA 520 is to confirm management representations, obtain audit evidence using analytical procedures, evaluate internal controls, or detect all errors or frauds. No, the correct option is option B, obtain audit evidence using analytical procedures. Key definitions, key terms. First one is analytical procedures. Evaluation of financial information through analysis of relationships, expectation, and amount or ratio the auditor predicts using reliable data. Plausibility, whether the relationship makes logical business sense or not. Key requirements. Main duties of the auditor. What are the main duties of the auditor? Develop expectations, compare expectations with recorded amounts, investigate significant differences, professional judgment and skepticism. Auditor must challenge unusual results and do not rely blindly on analytics. Documentation requirement. Document expectations developed, variance identified, explanations and conclusions. Practical example. For example, sales increased by 40%, but gross profit margin declined sharply. What the auditor should do? Investigate pricing, cutoff, and inventory valuation. Discuss reasons with the management. Now, what is pricing, cutoff, and inventory valuation? Let me explain. Pricing means checking whether inventory is recorded at the correct cost or not. Audit objective is ensure inventory is valued at correct unit cost. Cost includes purchase price plus directly attributable cost. What is cutoff? Cutoff ensures inventory transactions are recorded in the correct accounting period. Its objective is that goods received before year end are included in inventory and goods sold before year end are excluded from the inventory. What is inventory valuation? Valuation means inventory is stated at lower of cost and NRV. Its objective is inventory is not overstated, obsolete, or slow moving items are written down. Linked to ISA 520. ISA 520 requires investigation of unexpected or inconsistent relationships. Let's see if we have any MCQ relating to this topic. At which stage of the audit can analytical procedures be applied? No, we haven't studied it yet. So move forward to the slides. Common mistakes. Frequent errors. Using analytics without forming expectations. Ignoring unexplained variances. Consequences of non-compliance. Insufficient audit evidence. Increased detection risk. Audit failure or reporting risk. Incorrect audit opinion due to weak analytical review. Exam focus points. Analytical procedures, expectations, plausibility, investigation. Areas frequently tested: planning analytics, substantive analytical procedures, final overall review. Its quick summary. Used at planning, testing and review stages. Now let's have a look on this MCQ. At which stage of the audit can analytical procedures be applied? So, planning stage, completion stage, planning, substantive testing and final review, or only during risk assessment? So the answer is planning, substantive testing and final review. Closing. Importance of applying the ISA properly. Correct application strengthens audit conclusions and reduces audit risk. Professional sign-off. Strong analytical procedures lead to strong audit opinions. Now, let's discuss some short questions that are related to exams. Scenario 1. During audit planning, the auditor notices that revenue has increased by 30%, while trade receivables increased by only 2%. Required, explain how ISA 520 should be applied. So, under ISA 520, the auditor should perform analytical procedures by developing expectations and comparing them with actual results. The unusual relationship between revenue and receivables should be investigated, as it may indicate cut-off errors or unrecorded receivables. Further audit procedures should be performed where necessary. Scenario 2. The auditor performs analytical procedures only during the final review stage. State whether this complies with ISA 520. No, ISA 520 requires analytical procedures to be applied during audit planning, as substantive procedures, and during the overall review. Limiting them to the final stage doesn't fully comply with ISA 520. Another scenario is an auditor compares current year ratios with prior year ratios but doesn't form any expectations. Required. Identify the weakness and explain its implication. So its answer will be the auditor failed to develop expectation which is required under ISA 520. Without expectations, analytical procedures may provide weak or unreliable audit evidence, increasing detection risk. That's all from my side. Thank you so much.